Good evening, Ken of Tortoise Capital. This is a review of the daily trading plan for May 17th, 2021. We're going to start with a swing trade frame posted in the chat room by Bill Scheit on soybeans. He's using the R Factories frame of reference with the toggleable indicators on the side to make it easy. And he had two positions off of this double bottom and Z3 pinch breakout in soybeans, which got to a Z2 excursion, rolled back and hit his stop at the PSAR for a net of 3.8. Very well done. Good job, Bill. I'm going to shift to the daily report real quick now. So we'll go right to the market health check. So we had a slight gap down and essentially a doji inside the dragon. The RL30 is still sloping down. The PSAR has still got a lid on this thing. We're above the 2.5% sell-off from the swing high, and above the 5% sell-off is just below this 30-day low, which is also the 10-day low. That's 4.47%. So we're holding support at the spine of the dragon, just above the Bollinger Band mean, slightly below fair value, long-term fair value. We have peaked. So any failure out of the dragon here would be an owl, and I would really treat that as a COTA 2 entry on the short side if it were to break below the RL10, which has popped up. But it wouldn't take much for this to roll back over, and then our downside target would be the 10-day low. So that's an owl in formation right there. However, a breakout above the skin of the dragon is a COTA 2 to the upside, because we had a swing low back here, and we're going to have another a higher swing low here. So we are entering into a critical state by all means. We remain in bullish normal conditions. So bullish normal conditions, overbought long term, slightly above average short term. A general weakening of the market, though, and that coincides with this critical state in the volatility statistic here, the risk index and the risk Z, which are at the critical -1, the very low end. If this breaks down, there's another 5% sell-off available to the downside. No channelings or overreactions, with the market kind of in the middle of the dragon right there. The Max Payne winners, Morgan, DuPont, Merck, Cat, Johnson & Johnson, all the conservative large caps. The losers in here, Disney, Home Depot, Boeing, Intel, and United Health. Tesla is still not getting it done. And the S&P Genomics biotechs are suffering as well. Lots of dojis today in the Dow. A handful of breakouts to the upside. So we would be looking for continued strength in DuPont and in JP Morgan and in Merck. So it is the consumer staples, energy, finance, and materials are getting it done, while tech continues to lag. You can see that Apple was a % loser today, Salesforce a % loser today, Microsoft a % loser today. In the ETFs, also plenty of dojis, just a couple breakouts. There's gold broke out on 10-day, 1 month, 3 months. Silver broke out, and oil exploration broke out. Just 155W here in Asia less Japan. Quite a few symbols testing out well on the auto framer as we get into this beginning to be a Z3 pinch condition. Lots of auto framers to choose from. Emerging markets, consumer discretionary really stand out to me at better than 3.5 to 1. I still like technology for stalking at 2.9 to 1. Apple, Microsoft, and American Express here in the low middle around 2 to 2.5. Daily squeezes, just a few. United Health, Travelers, IBM, 3M, American Express, and Visa. all look interesting. Fall and winter are dominating now in both the ETFs and in the Dow 30. Although the Dow 30 is a little bit stronger. We have more in the summertime, but you can feel fall creeping in. Multi-time frame NDX, big wins today. Merck, DuPont, Morgan, strong of the strong. Chevron offered a nice pop, as did Walgreens. And then it's industrials, metals and mining, oil and Brazil. Looking pretty good. The slope of the IL-30 has now come back to the long-term average. You can see that's the same chart here, as things have rolled over and are still looking weak. The percent stretch is back within the range of normal, so that actually is a good thing that we haven't had more sell-off in spite of that weakness. But this is where you would expect the things to improve. Here's the average. Here is the zero line at the dashed line. So we're in the bottom, Z minus 1. So this would be a natural place for it to find support. The last time it held support here, and here there were two very good upward moves out of that consolidation. So we will be watching for that. And then finally, the RL90 is still showing favorable bull. The RL10 has bottomed out where you would expect it to at Z minus 1. So if the RL30 can hold here at the long-term average, then we could have some real gains. Smack dab in the middle of a narrowing river right here that could become some sideways quiet channel if we're not careful. And that's everything I want. We'll get this posted and published. No live webinar tonight because of a regional soccer match, and we will catch you in the chat room tomorrow.